Honorable Minister of Finance and Economic Development, Dr. Thapelo Matsika, board members, Deputy Governor, Dr. Kyaleboga Masalila, members of the media, distinguished ladies and gentlemen, good morning. On behalf of the board, management, and staff of the Bank of Botswana, I am honored and most delighted to present the 2021 Monetary Policy Statement. This year, however, due to the COVID-19 pandemic, which has disrupted the traditional ways of functioning, the launch of the statement is virtual. Honorable Minister, distinguished ladies and gentlemen, notwithstanding the challenges we are facing, or indeed because of the reality of uncertainty and periodic episodes of high-impact events, the publication and launch of the Monetary Policy Statement remains an important feature of policymaking in the bank's calendar of events. It is a key aspect of good governance, transparency, and accountability in the formulation and implementation of monetary policy. The challenges we are currently confronted with happen to reinforce the criticality of these basic tenets of policymaking and good governance. The bank, through the Monetary Policy Statement, seeks to promote an understanding of the monetary policy framework and its objectives. The ultimate aim is to guide the public's inflation expectations towards convergence with the bank's inflation objective, and therefore enhancing prospects for sustained maintenance of low, stable, and predictable inflation. Specifically, the bank uses the Monetary Policy Statement to report on the inflation trajectory and policy performance in the past year, to outline and convey its prognosis of economic and other policy developments going forward, and in turn, the prospective monetary policy posture in the year ahead. Distinguished guests, the objective of the bank's monetary policy is to achieve price stability, defined as a low, stable, and predictable level of inflation within 3 to 6% in the medium term. Monetary policy formulation is also aligned to safeguarding stability of the financial system. In this regard, price stability as well as conducive monetary and financial conditions foster mobilization of savings, productive investment, prudent allocation of credit, and international competitiveness of domestic firms. In turn, a sound and stable financial system is critical for effective transmission of monetary policy signals, facilitating the flow of funds and liquidity, as well as risk mitigation in support of economic activity. Overall, therefore, the conduct of monetary policy, as well as a sustained focus on financial stability, support the national policy objectives of employment creation and sustainable economic growth. Price and financial stability also help to preserve the value of incomes and long-term savings, especially for low-income earners and pensioners, with less opportunity or other means to protect the erosion of the purchasing power of their incomes or financial savings. In essence, the Monetary Policy Statement commits the bank with respect to its role in contributing to macroeconomic stability and prudent policy making. This is particularly propitious in the advent of the COVID-19 pandemic, which, in addition to devastating impact on economic activity and livelihoods, could challenge the resilience and efficacy of conventional policies and lead to inadvertent disruption or destruction of otherwise good and time-tested policy frameworks and rules. In the circumstances, the bank believes that to surmount and live through the crisis without engendering long-term damage, it is important to first have the fortitude to not allow a crisis destroy hitherto a track record of prudent policy making, solid institutional frameworks, and in general governance architecture, which could have lasting adverse effects on policy integrity, credibility, and economic performance. Second, to have the foresight and agility to not waste a crisis, as the saying goes. That is, the ability to seize the window of opportunities engendered by the crisis to undertake structural and policy reforms. In the context of the bank, this relates to prospects for enhancements of policy transmission and effectiveness, as well as fostering development of capital markets, particularly the market for government securities. Related thereto, the potential and ability to respond expeditiously and meaningfully to adverse development is also fostered by preparedness in terms of policy space and frameworks, clear institutional responsibilities, as well as the state of banking or financial system generally. I will later on outline the specific measures that were undertaken by the bank against the background of this state of preparedness. Overall, while pursuing its policy objectives and mandates, the bank is committed to ensuring that macroeconomic policies are congruent, and accordingly, policy choices and responses are positive for immediate stabilization and also sustainable in terms of long-term impact on economic development and resilience, including soundness and stability of the financial system. Honorable Minister, distinguished guests, let me now revert to the established structure of the monetary policy statement and address in turn, first, the global trends that have influenced inflation in Botswana. Second, highlights of the conduct of monetary policy internationally and here at home. And third, the medium-term inflation outlook and outline the likely policy stance in 2021. I now turn to external economic developments in 2020. Global economic performance and sentiment in 2020 were negatively affected by the outbreak and spread of the COVID-19 virus. Therefore, global gross domestic product GDP declined by an estimated 3.5% in 2020 compared to an expansion of 2.8% in 2019. The contraction markedly surpasses the 0.1% contraction in the 2008-2009 global financial crisis, and it is the worst since the Great Depression of the 1930s. For the first time, all regions experienced negative growth, and China, which registered positive growth, was an exception among the major economies, helped by relatively early effectiveness of disease containment measures. Given the economic contraction, inflation generally fell globally. The average for the world is from 3.5% in 2019 to 3.2% in 2020, and from 2% to 0.5% for the SDR countries, and regionally from 4% to 3.1% in South Africa. Consequently, the weighted average inflation for Botswana's trading partner countries decreased from 2.9% in 2019 to 1.7% in 2020. I now turn to domestic economic developments in 2020. For Botswana, output contracted by 6.4% in the 12 months to September 2020, compared to an increase of 3.7% in the year to September 2019. Both mining and non-mining production fell, mainly resulting from the impact of the COVID-19 pandemic containment measures. Mining output declined significantly by 21.9% in the year to September 2020, compared to a 1.4% growth in the year to September 2019. During the same period, non-mining GDP contracted by 4.7% compared to a growth of 3.9% in the corresponding period in 2019. Domestic inflation was below the lower bound of the objective range of 3 to 6% in 2020, and the outcome was broadly consistent with earlier projections. Average inflation decreased from 2.8% in 2019 to 1.9% in 2020, largely because of the decrease in domestic fuel prices, which was more pronounced relative to the increase in electricity tariffs, public transport fares, and postal tariffs in the same year. Overall, low inflation in Botswana was in the context of restrained domestic demand pressures and subdued foreign inflation. Notably, and in contrast to the overall trend, food price inflation accelerated from 3% in December 2019 to 3.6% in December 2020. Among the domestic demand factors, government expenditure contracted by 10.1% in the first 11 months of 2020 compared to an increase of 15.4% in the prior year. Within this, personal emoluments rose modestly by 2.6% following the September 2020 public sector salary increase initially deferred due to economic challenges exacerbated by the COVID-19 pandemic. The other main driver of demand growth in commercial bank credit eased from 7.6% in 2019 to 4.5% in 2020, as both demand and supply were restrained due to reduced economic activity and uncertain prospects. Lending to businesses contracted by 0.5% in 2020, following a 1.7% decrease in 2019. For households, annual credit growth decelerated from 13.7% in 2019 to 7.3% in 2020, encompassing lower rates of increase for personal and mortgage loans. The subdued pressure on inflation in Botswana is also apparent from below-trend economic activity, signified by a negative output gap as the economy continues to operate below potential. At the same time, the recent labor force surveys result by Statistics Botswana, which reports an unemployment rate of 24.5%, reinforces the assessment of below potential performance of the economy, hence restrained aggregate demand and consequently subdued pressures on inflation. I now turn to global monetary policy implementation in 2020. Honorable Minister, distinguished guests, monetary policy implementation in 2020 was generally accommodative at the global level, characterized by counter-cyclical policy measures aimed at stimulating economic activity. These measures were also necessary to forestall possible lasting economic devastation, as well as preparing ground and creating conducive conditions for durable economic recovery. Therefore, most central banks in both advanced and emerging market economies aggressively reduced their policy rates and in some instances expanded or launched asset purchase programs to support the financial sector. For example, closer to home, the South African Reserve Bank reduced the repo rate by a cumulative 325 basis points to 3.5% in 2020 to support economic activity in that country. Domestic monetary policy implementation in 2020. The background to policy implementation in Botswana is that as a small, open economy that is integrated with regional and global economies, the country's export earnings fell considerably as a result of the adverse impact of the COVID-19 pandemic on economic activity, notably mining, tourism, and hospitality industries and services. At the same time, the necessary disease containment measures globally and domestically significantly disrupted supply chains and implementation of planned projects such as construction. These measures throttled economic activity with devastating effect on employment, incomes, and in general social welfare. In turn, the resultant weak economic performance, combined with measures adopted by government to support firms in hard-hit sectors, such as wage subsidies and deferral of some tax payments, led to a significant weakening of the fiscal position and external buffers. Against this background, the bank's policy responses within its mandate contributed to immediate stabilization and support for economic activity, reform efforts, and long-term structural transformation initiatives. As I alluded to earlier, at the start of the pandemic, there was ample space for monetary policy easing. Monetary policy was conducted in an environment of a deep global recession, external trade shock, and weak commodity prices, notably diamond exports and weak or below trend non-mining output, as well as a positive outlook for inflation. For the entire 12 months period to December 31st, 2020, domestic inflation was below the lower bound of the medium-term objective range of 3 to 6% and forecast to remain within the objective range in the medium term. Second, given the prevailing level of interest rates, there was scope for reduction of the policy rate without encountering constraints to transmission. Third, the bank had the latitude to improve access to liquidity by commercial banks through a variety of available instruments. And fourth, like in most other jurisdictions, and in contrast to the 2008 global financial crisis, the banking sector and indeed the broader financial sector were in a strong position. In the circumstances and in recognition of the short-term adverse developments in the domestic economy due to the COVID-19 pandemic, and also taking into account the anticipated disinflationary pressures from the below-trend economic performance in the medium term, the bank implemented several measures to avert or alleviate the prospective adverse economic fallout. Specifically, in order to preempt liquidity constraints that could be engendered by the adverse impact of the COVID-19 pandemic on the economy and financial markets, in April 2020, the bank introduced a number of measures to enhance access to liquidity by commercial banks. In this regard, the cost of accessing overnight funding by licensed banks from the Bank of Botswana credit facility was reduced by doing away with the punitive 6 percentage points above the bank rate that hitherto prevailed. In addition, repo facilities that were available only on overnight basis were extended and offered against eligible securities with maturity of up to 92 days. Furthermore, the collateral pool for borrowing by licensed commercial banks from the Bank of Botswana was extended to include all corporate bonds listed and traded on the Botswana Stock Exchange, subject to completing regulations and arrangements relating to valuation, that is haircuts, and acceptable custody arrangements. The bank also reduced the minimum regulatory capital adequacy ratio from 15% to 12.5% of risk-weighted asset to provide additional capacity for banks to support economic activity. Regarding monetary policy conduct during the year, the bank rate was cut by a cumulative 100 basis points from 4.75% to 3.75%. The bank also reduced the primary reserve requirement, that is PRR, from 5% to 2.5%, which injected 1.6 billion into the banking system and allowed commercial banks to be unconstrained in performing financial intermediation to support economic activity. Here, I would like to acknowledge the gesture and responsiveness of the banks in offering their customers in the affected sectors loan repayment holidays for periods of up to 6 months, restructuring of credit facilities to ease repayment burden, and in the case of insurance companies, moratorium on payment of policy premiums without the risk of loss of benefits. Regarding other measures, in order to foster the conduct of transactions and payments in the advent of movement restrictions and social distancing protocols, the daily limits for mobile money operators were raised to double the hitherto prevailing levels, and overall limits were also substantially increased. Related thereto, commercial banks offered their customers discounts on fees and other charges for digital transactions and remote banking channels. Overall, the policy measures and initiatives by the bank were aimed at providing support to economic activity, in particular to ease the cost of borrowing, improve the cash flow of position and balance sheets of both businesses and households, and to anchor demand during the recovery phase of the economy. In terms of market response, short-term interest rates, including BOBC yields, generally decreased, reflecting the reduction in the bank rate. The prime lending rate of commercial banks declined from 6.25% to 5.25%. The liquidity position and market activity were largely stable in the context of some certainty about access to liquidity. Outstanding Bank of Botswana certificates amounted to 7.8 billion in December 2020, a decrease from 8.6 billion in December 2019, associated with substitution into government securities and foreign exchange sales. Distinguished guests, as I indicated last year, the bank continuously evaluates the monetary policy framework and monetary policy operations for effectiveness and introduces refinements where necessary. In that regard, the bank discontinued the issuance of the 91-day BOBC effective October 2020 as the government reintroduced the 3-month Treasury bill, the T-bill. This was against the background of the increase of the ceiling of the government bond issuance program from 15 billion pula to 30 billion pula. The discontinuation of the issuance of the 91-day BOBC has at least 2 benefits. First, it eliminates competition with the 3-month T-bill and therefore supports the building up of the government T-bill market. Second, it allows for a clear separation between monetary policy operation and public sector debt management in line with best international practice. It is also worth noting that since the introduction of the primary reserve requirement averaging in 2019, most commercial banks continue to actively use this instrument as a tool for effective management of liquidity. Furthermore, as I announced in the 2020 monetary policy statement, the continuous evaluation of the policy framework also involves, among others, the assessment of the choice of anchor policy rate between the bank rate and the operating BOBC stop-out yield. In particular, this is with respect to the relative efficacy in terms of the impact of changes thereto on the market and potentially policy transmission. There have been extensive consultation with the stakeholder community in this regard, and the evaluation towards a possible change is ongoing. The remaining work entails further qualitative and quantitative impact assessment of possible transitional disruption to the benchmark pricing framework for existing credit facility, endowment effects, and other financial contracts. Distinguished guests, I'm also pleased to report that the Financial Stability Assessment, as indicated in the October 2020 Financial Stability Report, concluded that, notwithstanding the challenges engendered by the onset of the COVID-19 pandemic, the domestic financial system remains resilient, characterized by strong capital and liquidity buffers, as well as relatively low default rates or non-performing loans. The enduring stability of the financial system was supported by a sound macroeconomic environment, efficient market infrastructure, effective supervisory frameworks, and prudent risk management by the banks. Therefore, the financial sector continues to be well placed and resourced to support economic activity, both during the current challenging times and prospective recovery phase of the economy. Let me now turn to the global economic prospects in 2021. Honorable Minister, distinguished ladies and gentlemen, now looking ahead, the global economy is expected to rebound to growth of 5.5% in 2021 from a contraction of 3.5% in 2020. The projection is premised on expectation of successful deployment of effective COVID-19 vaccines, as well as maintenance of supportive fiscal and accommodative monetary conditions. Key upside risks to the outlook include further favorable outcomes on COVID-19 manufacturing, distribution, and effectiveness of containment measures generally. However, there are enduring significant downside risks to the economic prospects. Among others, there is a possibility of resurgence of disease outbreaks in places that had gone past peak infections. Second, the threat of mutation and emergence of more problematic variants of the coronavirus. And third, the logistical problems relating to the procurement and distribution of COVID-19 vaccines, particularly in emerging markets and developing economies. Fourth, the likelihood of more severe, longer-lasting effects on the pandemic, on the potential output. And fifth, the possibility of financial stress triggered by high debt levels and anemic growth. Regarding price developments, global inflation is expected to pick up in 2021, reflecting the anticipated recovery in commodity prices, in particular international oil prices, and global demand as most countries roll out effective COVID-19 vaccine programs. However, it is anticipated that monetary policy will remain accommodative in most economies, complemented by measures aimed at facilitating financial intermediation while fostering resilience of the financial sector to support growth in economic activity. I now turn to domestic economic prospects in 2021. Honorable Minister, distinguished ladies and gentlemen, the domestic economy is forecast to grow by 8.8% in 2021, largely a reversal of the estimated contraction of 7.7% in 2020. The improvement is premised on conducive financing conditions associated with accommodative monetary policy and a sound financial environment. In addition, the midterm review of the National Development Plan 11, supported by effective implementation of the Economic Recovery and Transformation Plan, provides added impetus for positive economic prospects. Overall, both external and domestic pressures on inflation are expected to be benign, and it is projected that inflation will revert to within the bank's 3 to 6% medium-term objective range from the second quarter of 2021. The forecast incorporates the announced increase in value-added tax, fuel levy, electricity tariffs, Botswana Housing Corporation rentals, as well as the introduction of sugar tax. The forecast also takes into account the likely impact of domestic fuel prices, of the expected increase in international oil prices, the anticipated strengthening of commodity prices generally, the upward revision in the South African inflation forecast, and the base effects associated with the decrease in fuel prices in 2020. Having said that, I should be quick to caution that any upward adjustment in administered prices and government levies and or taxes that has not yet been announced, accelerated implementation of the Economic Recovery and Transformation Plan, aggressive action by governments and major central banks to bolster demand, and an increase in international commodity prices that is substantially beyond the current projection present upside risk to the inflation outlook. In contrast, downside risks to inflation arise from prospects of weak domestic and global economic activity and implementation capacity constraints that could hinder the effectiveness of policy stimulus and the Economic Recovery and Transformation Plan initiative, resulting in low inflation. Let me now turn to the 2021 monetary policy stance. Distinguished ladies and gentlemen, based on available data, the current projections suggest that domestic inflation will, in the short term, revert to and remain within the bank's medium-term objective range of 3 to 6%, but move closer to the upper bound. The overall favorable medium-term outlook for inflation is in the context of moderate growth in economic activity and a sound and stable financial system. Therefore, prospective developments augur well for maintenance of an accommodative monetary policy that supports productive lending to businesses and households, potentially resulting in welfare enhancements that also drive economic activity. The implementation of monetary policy will continue to focus on entrenching expectations of low, predictable, and sustainable inflation through timely responses to price developments, while at the same time taking due care to ensure that policy decisions are consistent with durable financial stability and support sustainable economic growth and employment creation. As announced at the beginning of the year and broadly consistent with Botswana's trade pattern, the weights of the constituent currencies in the Pula basket are 45% for the South African rand and 55% for the SDR. A downward rate of crawl of 2.87% of the nominal effective exchange rate is also being implemented in 2021. With low inflation, the policy framework allows flexibility to loosen real monetary conditions through a downward rate of crawl to enhance global competitiveness of the domestic industry and support economic growth. This exchange rate policy framework is anchored on strong performance and adequacy of the foreign exchange reserves, which have, however, recently fallen from 65.2 billion or 12 months of import cover in December 2019 to an estimate of 53.4 billion or 10 months of import cover in December 2020 due to the adverse impact of COVID-19 on domestic economic performance. Thus, the importance of the flexibility inherent in the exchange rate framework that facilitate adjustments necessary to generate improvements in international competitiveness of the domestic firms, and therefore better balance of payments outcomes that support maintenance of adequate level of foreign exchange reserves necessary to cushion the economy against adverse economic developments. In concluding, Honorable Minister and distinguished guests, I wish to underscore that the continuing success in achieving price and financial stability, to which the bank remains fully committed, must in the end involve the cooperation of all key players in the economy, including government, parastatals, and the private sector. The other point to conclude with is that given that monetary and fiscal policies are purposefully expansionary to boost prospects for economic recovery, immediate and effective implementation of transformation initiatives and structural reforms by all involved would be critical to raising prospects for faster and inclusive growth as well as economic diversification. Furthermore, the redesign of industrial and trade policies to promote exports, transition towards digital economy, greater financial inclusion, and broader participation by all segments of society in productive economic activities should result in fast-tracking the recovery as well as enhancing economic resilience and moving the economy to a high-income status. In this regard, the onus for effective implementation is not on government alone. It is on the public sector broadly, including parastatals and development finance institutions, as well as a more innovative and dynamic private sector. In the private sector, this includes all those designated and awarded government contracts and project implementation roles, and those that benefit from funding and other support by the public sector. Honorable Minister, distinguished ladies and gentlemen, members of the media, I wish to thank you very much for your kind attention. I thank you.
Just presented a monetary policy statement for 2021. I have the pleasure to hand over to you the statement you
Thank you. So we can't touch.
Oh my God, we can't touch. Honorable Minister.
Thank you very much.
Thank you very much. Yes.
Thank you.
Thank you.
No, thank you, Governor.
Thank you, Minister.
I would like to make a good reading.
Yes.
Thank you very much.
Thank you very much.
Thank you.
So, Honorable Minister, what we will do is that we will also produce sufficient copies that you can have distributed to Cabinet and MPs,
Okay.
as well as the general public.
Okay. Yeah. I've got cabinet tomorrow. I wish we had some today.
We should have them ready
Yes.
for today.
We'll check them there.
Yes, that's enough copies.
Yes, for
Cabinet, yes.
Cabinet tomorrow.
Yes.
Okay.
Okay.
Thank you.
Thank you, Governor.
Thank you, Honorable.
Yeah, let's do the last picture.
Thank you.
Come, go for it.
Thank you.
Yes.
Yes. Thank you.
Speak details.
Thank you. Thank you.
Thank you, Governor.
Hey,
Thank you very much, and all the best.
Yeah, thank you. Yeah.
Thank you.
Yes.
Governor.
Yes.
Thank you very much.
Yeah.
It's good.